Everybody, Spartan from SpartanTrading.com. Want to hit you guys with a quick educational video today. And this one is, I think, perfect in regards to the time that we're in within the market where we are trading in a large range. If you haven't seen what the market's been doing, or if you're looking back on this video, basically what I want to talk about essentially is just trading volatility and trading high volatility type of environments or high range type of environments where you can see these massive candles on the SPY to the upside and to the downside. And if you guys don't know, these candles, top wick to bottom wick is the range that the stock's trading within that time frame. But when you have these large ranges or large channels that we're trading within, there's a couple different things that will help you. Now, number one is you have a large amount of range. You don't need as much size to make your goals. And as well, because you have a large range, you are going to have a little bit looser stops. So by reducing your size in this type of environment is something that's key. You have to reduce your size. On the options or equity side, especially on the option side, because you're going to get that high volatility of these options moving, large amounts to the upside, large amounts to the downside. If you've had a sell-off like we've had, we have a really high, or we have a higher VIX, which juices up the premiums on the options, which makes them quite expensive, more than what they would normally be. So when you do have volatility, especially to the downside, it does make sense to size down on both options and equity, and options definitely can make a huge impact, especially with your stops and where they're set, because a lot of the times you're going to get a lot of whipsaw movement intraday, and that could easily whip through your stops if they're too close to your average. So sizing down, first and foremost, probably one of the most important things. Another thing is when you do have large amount of range and volatility, guys, focus on fewer things. Trade less, focus on fewer things. And if you want to take more trades, or the normal amount of trades that you take, just make sure that the size is really reduced, because it's harder to manage a large amount of positions in this type of environment. Like I said, you get whipsaws to the upside or the downside. You have these large moves in regards to the range, and you have to be able to exit at the right times, and you can't focus on everything at one time. So the fewer things you have on, the more likely you're going to be able to focus and make the correct decision at the correct time. So super important in that regard. So I think frequency and sizing down, probably the two biggest things. Just want to give you guys a quick little, some tips within this environment. I think it's, makes sense from a logical standpoint. It's probably obvious, but sometimes the most obvious things don't click unless you hear them said. So hopefully this helps, guys. Otherwise, thanks for watching, and I'll talk to you next week. If you have any questions, you can go to SpartanTrading.com. Always happy to help. Have a good one, guys. See ya.